you get here, you guys, is irs.gov. If you didn't know, irs.gov, and then you click on the Form W-4 and you will see the tax withholding estimator. The very first question is all about you. What is your filing status? Single, married, filing jointly, married, filing separately, head of household, qualifying widower. If you don't know, okay, you can always click the question marks. They have question marks as you go. For example, head of household. A lot of people used to think the person who makes the most money in the marriage is considered head of household. That is the furthest from the truth, you guys. Read here. Generally, you may claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or other qualifying individuals. If you are married, you can't file head of household. If you are unmarried, but you don't have any dependents, you cannot file head of household according to the IRS. So if for whatever reason you are confused about your filing status, click the little question marks, and you actually can click those question marks all throughout this tool if something is confusing to you.
Absolutely. And we're going to mimic the same example. So this is going to be an example of the Johnsons again. I added up some math because their filing was in February and now we're in the month of October. So the numbers may be a little different, but nonetheless, I'm going to do married filing jointly just to kind of mimic what we've already saw. But of course, you'll fill it out based on your scenario. So married filing jointly, then it pops up down here. Do you or will you or your spouse have a job or a pension that regularly withholds federal income taxes from your paycheck? So the answer is yes. This job will take out money regularly in the form of federal expenses. Select any that apply. We'll leave this blank, just like we did in the initial example. None of these apply to their scenario. So we'll just click next.
So you guys, if you notice, after you answer one question, then it populates either the next part of the question or the next question. Mm-hmm. You can't go wrong with filling this out. It's literally going to populate as you go, okay? Let's talk about the income and withholding. Enter information from for each job and or pension you will earn income from this year. All fields marked with the asterisk are required. How many jobs and or pensions will you and your spouse have this year in which federal income tax is regularly withheld? Include past, present, and future jobs and pensions. The first one has been added for you. Guys, this is the IRS. They want to know everything, okay? Right. They want to know every dollar that you have coming into your household, how many jobs you work, how much taxes you're paying, got any side income, getting retirement, you got a grant, right? They want to know everything that's coming into your household. So for the first income, we're doing the husbands. It is $50,000.
All right. So when they say how many jobs, this is the spouse and you. Oh, yeah. So we're going to do 2 right there. And this is the new part. So I'm hoping that this is exactly what they're asking. At first, it didn't look like this, but we're putting 2 because they said you and the spouse. So it'll be 2 jobs, 1 each. If we got to go back and change it, then, we learn together. My first income source is, we're going to say, we can do hourly or salary, but I guess we could do.
Let's do hourly.
We could do hourly. So it really don't matter. All right.
Select what best describes when you or your spouse earn income from this job.
Our year, January.
Oh, when? Sorry.
Yeah. Our year, January through December 31st. I currently hold spouses. I had my spouses already this year. I do. Okay. So we're going to do all year. So we're assuming that they started and they worked this job all year. This part is new. So just, fill it out based on your scenario, but pretty much it's going to still line up the same. How frequently are you and your spouse paid? And honestly, they trying to make it even more exact because for them to ask whether it's salary or hourly or Social Security or pension, they're trying to get down to the nitty gritty so the numbers are even more accurate. So that being said, it says, how frequently are you and your spouse paid? On this one, we're going to do twice monthly, because I believe that's how it was for them last time. It was either every 2 weeks or twice monthly, but we'll just do twice monthly. Using your or your spouse's most recent pay stub, when did your you or your spouse's most recent pay period end? So I'm gonna just choose the last Friday in September because it's currently the 6th. So we'll take it back and we'll say the pay period ended on September the 24th. Select the option that best describes your spouse, you or your spouse's current situation. Me or my spouse last paycheck was a good representation of how much I or my spouse earned on an average pay period. Yes. Now, if your checks vary from week to week, averaging 2 to 3 paychecks will provide more accurate picture of how much you or your spouse make. But we're gonna say that it's an accurate depiction of what you make on the average. They're really trying to get down to the nitty gritty to make sure their numbers are as close to accurate as possible. So we're gonna say that everything is, typical. Enter the wages per pay period. Now, for the wages per pay period, I'm gonna have to do some math because I didn't put wages per pay period. I just put that they earned $50,000 for the entire year. So we'll start. Did you say you want to start with the husband or the wife?
The husband.
All right. So per pay period. So if he makes $50,000 for the year, that's about $2,500 per pay period. If it was 10 months, so we're gonna just say about $2,000 per pay period. I know that number is a little off, but roll with it. Enter wages earned year to date. It's October, so if it's per pay period, $2,000, that's $4,000 a month times 10. So we're at $40,000 year to date, give or take. I know that number's a little off, but he still got 2 months left to work.
That's right.
All right. So based on the information provided, it looks like you or your spouse annual income from this job is $52,000 this year. Is that correct? So they're calculating on the money. And this was my math. So my math was off by, about $2,000, but hey, we're gonna say yes. 52,000 is the amount that it looks like he's going to make. Enter taxes paid per pay period. So taxes paid per pay period is $131. Per pay period is $131. That's what I put. Enter taxes paid year to date is $2,500.
And guys, keep in mind, this is why it's so important to have a paycheck stub in front of you. If you're wondering why we're kind of scrambling just a little bit, it's because we had to come up with the example ourselves because we don't work jobs. But if you work a job, you have to have your last paycheck stub in front of you, and you'll be able to go through this really, really smoothly.
Absolutely. And I'm gonna fill it out for the typical person. This person is not adjusting contributing to the 401k, the cafeteria plan, no bonuses, none of the above. So we'll check none of the above on this one. And then the second income source. So we'll hit that plus sign, and this will be referring to the queen. We're gonna say that she has an hourly job as well. Do you want to take it away from here?
All right, select what best describes when you and your spouse earn income from this job all year. How frequently are you paid? We're gonna do twice monthly. All right, using you or your spouse's most recent pay stub, when did you or your spouse most recent pay period end? We're gonna do the same thing, right? The last Friday in September. Do you or does your spouse have any other sources? Oh, I skipped. Select the option that best describes you or your spouse's current situation. We're gonna go with me and my spouse's last paycheck was a good representation of how much I or my spouse earn on average each pay period. Wages per pay period, we're going with.
All right, wages per pay period. So about 5,000. She earns about 5,000 a month, give or take. So we'll shave off. So we'll say that she earns about 4,800 a month, so that'll be 2,400 per pay period. So we're gonna do 2,400 per pay period. Wages earned year to date is the month of October. So if she earns about 4,800 a month, then that'll be year to date. So 5,000. So she's about at 48,000 for year to date. And based on the information provided, it looks like your spouse annual income from this job is 62,400. So
change this one right here, babe. Change it to 41.
Okay, we'll change it to 41 to make it line up with more like the 55. So yeah, we'll do that. Perfect. So 2,400, 41,000. So about 55,000 is about what she'll earn. Is that correct? Yes.
Enter taxes paid per pay period, okay? So for her, $156 is what we got, and year to date, we did 3,000. Select any that apply, and we're gonna leave these blank, so we're gonna do none of the above. Does you or does your spouse have any other sources of income? Y'all, it's the feds. They wanna know everything.
Everything they want.
Okay, I don't have any other sources of income. Let's say the job is their only sources. Hit next.
Yep, they want to know. Next, you're going to see crypto on here. So just get ready because they got investment income, self-employment income. They want to know. All right, adjustments to income. It says most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. All fields marked with an asterisk are required. Select any adjustments to income you plan to make when you file your 2021 income tax or go to the next step. So we're going to leave these blank because I want you to just get an understanding. And we don't have any adjustments to income, so we're gonna leave these blank and go next.
All right, so next we have deductions from income. And it tells you deductions reduce the amount of your income subject to income tax. You qualify for the standard deduction. So y'all see that same thing popped up. The standard deduction, according to the numbers that we've put in thus far, is $25,100. You're only going to itemize. This would be a good example if you had a small home-based business, like my econ, for example, and you have more than $25,000 in deductions. In this case, they are only working a job, so they're not going to itemize. We're going to take the standard deduction.
Absolutely. If your itemized deductions are less than your standard deduction, the tool will use the standard deduction automatically. So we'll just hit next.
All right, now tax credit. Tax credits are amounts you subtract directly from your tax obligation. And as y'all can see, child and dependent care credits, foreign tax, educational, retirement, homeowner, elderly, business, and alternatives, okay? They did in this example have 2 children, okay? Ages 7 and 10. What does it say? Enter the age the child will be on December 31st.
Right, so this right here is dealing with the dependent care. So we're not gonna, in the initial example, they did have daycare expenses, but we're not gonna enter that because we wanna get you to the end so we can give you some more goodies towards the end. But typically, if a person had dependent care, this is where they will go. So we will leave it blank in this example. The first example, you got a dose of how they look and how they played out. So we'll leave these blank. But as you can see, it's quite a few different things that could contribute to them having tax credit. As you can see, foreign tax, educational, retirement, homeowner, elderly, business, alternative, and then energy efficient vehicles. So we're at the tax credit section, and now we're at the results. So on this one, matter of fact, let's go back to the child because I just thought about something. I'm gonna go back to the child area because I want y'all to see what the adjuster tool looks like.
Okay, so we're gonna go ahead and put that in?
Yes.
Okay, so the age that the child will be December 31st, we'll just go with the ages 7.
Yeah, they had 7 and 10.
7 and 10, Child and dependent care credit, enter the number of qualifying children for the child and dependent care. If you are unsure, click that little question mark, okay? Enter the amount of qualifying work-related child care expenses.
All right, so in the example, they had 6,500.
Yes.
So I'm gonna just keep that same 6,500 and then scroll down. Enter the amount of children that qualify for earned income tax credit. The limit is 3, so we're gonna put 2 here. So some of this does include none related to child care, so I'm glad we did come back here. So we'll just leave that there. Adoption tax credit, we'll leave that blank. Then we'll go to next and see what changes.
And guys, did you see how easy it was to just go back?
Yeah.
Nothing is set in stone until you've actually printed this off and submitted it to your employer, which we have not showed you how to do that just yet. If you, now we're not telling you to fabricate anything whatsoever. We do not recommend it, y'all. This is the IRS. We don't play those type of games, okay? So you wanna be truthful, you wanna be honest. This is just a rough example, okay? But if for whatever reason you left something off, you were unsure about something, all you gotta do is go back to that section, and it'll take you back to that screen and reconfigure your results. So it's really, really easy to navigate.
Absolutely. And this is the beauty of this calculator, because it takes you to this results page, and now you'll see it's an estimated overpayment, also known as a refund. So the expected tax withholding was $7,222. The anticipated tax obligation was $4,000. If you do the math, the difference is $2,813 that they would get in the form of a refund. So if you see this gauge here, it says, are you gonna owe? Nope, it's way over here to the refund. So you don't have to worry about owing in this scenario. But this is where it gets fun, and this is the Queen's favorite part, so I'll let her take it away.
This is my favorite part. So after you get your results, you guys, so you see, it showed that they are entitled to a refund. If you owe, then the gauge is going to be on this side, as well as the number will be in red, okay? This one is in bold. So I wanted to point that out. When you scroll down, it asks you, are you happy with your results? Then you don't need to do anything. Want to adjust your results? Use the slider tool below to select the approximate refund amount you'd like to get. Their estimated refund was $2,813. Check this out, guys. The IRS is the GOAT for this one. Take this little tool and you can slide it. Now, see, they're not letting you go past this line. Reason being is because we're already so late in the year, okay? So the refund at this point is at the $2,813. If you decide for these last 3 months of the year, and you know people are gonna make this decision kind of based off the holidays and stuff like that. If you decide, no, I want this money dispersed in my last 3 paychecks for the year or the last 3 months of the year, slide this adjuster tool all the way over to 0. That means you will not get a refund. Keep in mind, this is the refund that we're talking about. You can get it throughout the year. You can get it during tax time as you typically would, or you can split it up. If you decide, in this example, I want my money now, slide it all the way to 0, and then look at what it says. Based on your inputs and current tax situation, this result is not achievable. Considering use the estimator tool early next year for a higher likelihood of achieving your desired refund amount. That is because it's so late in the year. So let's keep playing with it. If we take this adjuster and let's say we do it this way, I want a $1,400 refund, and the rest of it I want distributed throughout my paychecks. So you're getting basically almost half and half, a little bit over in the refund. Look at what the results are. For a refund of approximately $1,400, this is what you want to do, okay? Your first job, $52,000. To get your desired refund amount, you will need $2 with help from each paycheck. That is $129 less than your current tax withholding. Submitting a new Form W-4 resets your withholding to standard withholdings. If lines 3 through 4C are blank, your standard withholding is $118 per paycheck based on your filing status and income withholding. The recommendation for adjusting your withholdings to get a refund of $1,400 will be based on the standard withholding amount, not your current withholding, okay? So it's breaking that all down, and it even goes to show you, if you keep scrolling, how to adjust your withholding, okay? So literally, it's all here. When you print off that form, step 1, step 2, step 3, step 4, telling you exactly what to put on the paper form. The paper form is even listed here. Look at my cursor. That hyperlink takes you directly to the W-4. Scroll down. Let's talk about job number 2.
All right, so the second job is the Queen. To get your desired refund amount, you will need $2 withheld. So when you adjust it, you're still going to get a refund in the form of $1,400. However, the other amount that would have been in the form of a refund is now going to be coming to your paycheck. So when they say $154 less than your current tax withholding, you would have been paying $156, but that $154 is going to come back to your paycheck, each paycheck. So that's going to be, when you do the math, per paycheck, And I'm gonna go back to the first paycheck. When it says $129 less, that's gonna be $129 pay increase per paycheck. If you do the math on that, that's about $258. And then on the second job, if you do if you end up paying $154 less per paycheck, that person the queen is gonna bring in $308. So we got $129 extra coming in per paycheck.
$566.
And then $154 coming in per paycheck. So you did that, and altogether times 2
is $566.
So together as a couple, if they decide that they just want to, get the rest of their money throughout the year and get that $1,400 refund, they're going to be bringing in an extra $566 as a couple together. Individually, I gave you the numbers, but we're going to stick to the 566 because I want to show you what to do with that 566 more importantly. But as you can see, $2 will be taken out of their paycheck. They're still going to get a refund, but they're giving themselves a pay increase of $154. And basically, the form will be filled out and turned in once you print it out like we stated.
And send it to your employer, okay? Turn it into your HR department. You guys, so when you see us blasting testimonies, because I know we have a lot of new members here, when you see us blasting testimonies on social media saying this person gave themselves a pay raise of $300, this person gave themselves a pay raise of $129, this is what we're talking about. It's because they were entitled to a refund and they slid that adjuster tool and decided, I want some of my money throughout the year. I don't want that lump sum at the end of the year because I can start putting that money to work. So for this couple, if they're giving a testimony together, they would say that they received a $566 per month pay raise on their job.